Welcome to this week's Q&A, our post-Melbourne Cup event, and I hope everyone had lots of good fortune yesterday, and if they didn't back the Melbourne Cup winner, hopefully they backed a winner somewhere on their mortgage rate, because that's what we're here to talk about today. So one of our viewers from London asked me, he said, look, what's this rate meeting, the RBA rate meeting, going to mean for the interest rate on my loan? And the reality is that this meeting actually potentially didn't mean that much, apart from emphasising what we've been saying to our clients over the last 3 months or so. And that is that fixed interest rates will move up, have moved up marginally already, and I think now will move up further. So that's something that people need to bear in mind if they were looking to fix the interest rate on their mortgages for a fixed period. Time may be getting short in terms of getting that organised at the rate that's available today. So that's something you need to look at. But what's going to happen in terms of the variable interest rate? Well, not a great deal at this stage, because the RBA board decided to keep rates at 0.1%, as everyone knows they would have. The interesting thing is that they did remove the April 2024 yield target for that bond series. So again, this was widely anticipated by the market, but what wasn't, I suppose, is perhaps the more dovish note that Philip Lowe brought to this meeting, and that is to say, he said, look, we think that it still will take till 2024 to raise rates for inflation, core inflation, to meaningfully move up into their target band between 2 and 3% and stay there. But he's basically said, look, if conditions warrant things, and I think it's a very reasonable thing to do, if conditions warrant it, if wages growth is there, if core inflation is above 2.5% and stays there, then that may be something that they're going to do in 2023, late 2023. The bond markets have obviously been trying to, as it were, bully the RBA into doing something, and they're anticipating that rates are going to rise perhaps quite a lot sooner than that, at some stage in next year, 2022. So time will tell. However, it was a dovish note, and interestingly, the Aussie dollar sold off pretty rapidly after the meeting yesterday, and then continued its downward trajectory overnight against a whole basket of currencies. So perhaps not as hawkish as many commentators or the bond markets anticipated, but as the governor said, look, Australia is in a different position to, say, the US or some other economies around the world which have already raised rates. New Zealand, probably Bank of England will go next, Canada has. So we've got to look at all of those things and see how they play out. But the answer to our viewer's question is nothing's going to happen to variable rates right now, but if you have a loan and you feel, as we do, that rates will move up over the course of this cycle now, then perhaps locking something in, if it suits your overall purpose, is something that should be looked at and should be addressed. This is only general information, so if anyone needs advice about their own situation, by all means reach out and talk to us, and good luck to all of our Australian expat viewers around the world and all of our many, many Australian clients living in Australia. I hope you had a great Melbourne Cup, and if you enjoy what you hear from us, please subscribe to our YouTube channel and click like, and I'll see you again next week for next week's Q&A. All the very best. I'm Andrew Unterweger from Wise Guru.